here. So okay, I have a drawing here up. Hopefully you can see it properly. I put a candle. Each candle is 1 month long. This is pretty much since Bitcoin was born. So since 2010, right? 2010. This is in a logarithmic scale. So for example, it's the price over here is 4 cents. It goes up to $30 here, goes down to 260 whatever, goes up to 1,100, drops down to 180, goes up to 20k to 12k here, 20k here, goes down to like 4k, 3k whatever, 3k, then goes up to almost 70k, and now it's been going down. So it's been a month. It's been going down for about a month. It has gone down about from the peak. It has gone down like 75%, right? 75% from the peak here, and it's been the peak has been reached for more than a year already. So it's been going down. Everyone's been getting crushed, right? So what I want to look at is the 4 year cycle in Bitcoin, right? 4 year cycle. Why do we think in 4 years? 4 years because because of halving. Halving is basically inflation rate that is built into Bitcoin, the mathematical equation, mathematical algorithm that runs Bitcoin as a software. Basically, approximately every 4 years, the inflation halves. So basically, for example, over here in the first one, before the first halving, there was 50 Bitcoin mined each block, and each block is approximately 12 minutes. So 50 Bitcoin. Then after the halving, all this time here, before the next 4 years, the Bitcoin was mined 25 Bitcoins, then 12.5 and 625 right now. It's been mining 625 already for 914 days, almost 3 years, right? since 2020 May, right? So basically, next halving is at around May 24th, around 500 days from now. So what we're looking at here is we're trying to look at past behavior and something like fundamental knowledge of Bitcoin halving the inflation rate. We want to possibly see if there's any relationship. So basically what I have here is I have first of all this halving, which is every 4 years approximately. Then I got these gray boxes, which is 4 years long. So over here on the top ones, I've got from peak to peak, from peak to peak. So you can see pretty much that from time that the Bitcoin peaked in 2013 at around $1,200, and then the time to reach the next peak, it took about 4 years. Then from this peak at 20k to around 70k, it took another 4 years. So basically, what is the next? This is the next 4 years. The next 4 years is going to happen at around November 25. So that's the if we to use the same model, 4 years peak around November 2025. Also at the bottom here, I got the bottom when the bottom was hit, right? So the last two. So the bottom was hit in January 2015, and then 4 years later, we hit the bottom here in November 2018. Then from this bottom here to we project 4 years. So the projected 4 years is pretty much now, December 2022. So basically, if we are to take into account this 4 year cycle in Bitcoin, the bottom should be very, very near. Should be very near now. Next thing what I've done is I've got this purple boxes. I think it's purple boxes, and basically this shows when the bottom was hit, and it was basically the best time to accumulate. When is the best time to accumulate Bitcoin? And the length of this is all of them are equal in length about 609 days. 609 days. 600, approximately 600 days. Giving a few months past the halving, because usually because halving is a known event, therefore it's getting priced in. So it's getting priced in before the halving happens. You can see the price here is rising, for example. Here as well, the price is rising before the halving quite a bit. So possibly now we are hitting the bottom, and the price will start to price in the next Bitcoin halving around 500 days prior to the halving. The price started to rise, right? 500 days, around 500 days, 550 days, 550 days before. So now, according to this thesis, right, and this can be wrong, you know, it doesn't have to be correct. According to this thesis, now is the best time to accumulate Bitcoin. Like we can go down lower, you know, we can go sideways, but you know, if you collect the Bitcoin in these boxes, even though the price difference is huge, right, from here to here, there's a 400% price rise, but still, if you got in this box, your average price would have been I don't know, 360, and then boom, you went 55,400% up. So you 54x your investment if you invested in this time. And in here, same thing. If you invested into this box, like, I mean, the bottom price is different to the top price by 350% as well, 3.5 times. So huge difference. But let's say you averaged it in at around 5,200, 5,000. Then you went up 30x your time, 30x your money, right? 30x your money. So basically, we are in this box right now. And this is the accumulation box where we need to accumulate. You don't want to just, you know, sink all your money in one shot and just invest everything. What you want to do is you just want to buy every 2 weeks, every month, or whatever, you know, given that you assume that Bitcoin is not going to go to zero, you know. If Bitcoin is going to go to zero, then yeah, okay, whatever, you know, what are the chances of that? The chances of that are pretty low, but anything is possible. You know, World War III happens, Bitcoin is going to go to zero or close to that. But you know, maybe even in World War III, it might not go to zero. So anyway, this is the thesis here, and it's time to accumulate. The other thing we need to consider is that everybody seems to think, and there's a lot of indicators showing right now that we are entering a world markets, US, which is driven by US. US is entering a recession. Recession is basically when all the stocks are going down. And how exactly is this going to affect Bitcoin? We know that from the COVID dump over here, we had this 1 month where we basically were going up kind of thing. We were consolidating before the halving to go up. But then the COVID crisis happened, and we had a huge deep down liquidation candle here. So, you know, we got to take into account the wider markets into our thesis now, because Bitcoin depends on, you know, just it's correlated, right, to the stock market. So if the stock market keeps getting smashed because this recession is going to kick into the gear, then you know, we need to make sure that, you know, in this box, that could be the reason the price could still go down a little bit more, right, a little bit more until, you know, it starts rising maybe in the end of 2023, right? That's why you shouldn't shoot all your bullets in once. You should just slowly accumulate, assuming that the price is gonna go, I don't know, to where it went to 70K. Let's just say it's gonna go to 100K, 150K, who knows? So that's Bitcoin, right? If we look at the S&P 500, S&P 500 has been getting kind of smashed also, right? It went down all the way 27%. S&P 500 is the biggest 500 companies in the US stock market, so it's usually performs much better than all of the market. So it's gone down quite a lot, and it seems to be still it's still downtrending on the monthly. Right, on the monthly it's still downtrending. On the weekly, it's kind of it's not uptrending. It's kind of downtrending still. It's setting lower highs, lower low here. So we need to take that into account if the stock market drops down to this area here, something like that, then it would be huge opportunity to buy. If you look at Nasdaq, which is the tech companies, Nasdaq dropped even more. Look at it, it's almost at the fear lows. It went down almost 40% down, so it can go lower. We look at the like the biggest stocks like Apple. Look at Apple. Apple is like pretty good, 30% only. But look at things like Amazon, it's almost 60% down. Google, 45% down. Facebook, Meta, got smashed, bottom 75%. Microsoft did really well, 40%. Tesla got smashed. Basically, Tesla is getting smashed at 75%. NVDA only, well, 70%, also huge. Netflix, but it has a big bounce already, 77%. Everything is getting smashed, right? Things like speculative, like ARK. This is like high tech. This is like 80% smashed. We got BYND is like completely trashed, all-time low, 95% down. Oh my God, that's horrible. So Penn is like, I mean, yeah, all right, what is it? 80% down. If you invested in the growth stocks, you lost heaps. Like Bitcoin is actually performing better than most of these growth stocks, right? They've been completely smashed with 92% down. Oh my God, it's horrible, right? It's horrible out there. So and people are still saying that there's going to be more downside, right? Like how much more downside there needs to be. I mean, they will they will have to, if there's going to be a recession, and if we're going to keep going down, they will have to print money. Like they will have no choice but to print money. So basically, it's a good time to start accumulating. Like unless you believe that Bitcoin is going to zero, and I don't believe that. I believe that Bitcoin is going higher, but I especially believe that Ethereum is going higher. So I'm into Ethereum much more than Bitcoin. I would be accumulating Ethereum right now. So yeah, Ethereum is going to go much higher, in my opinion. But nothing is 100%. Nothing is 100%, right? So Ethereum is down 80%, right? So good time to start accumulating, because when the halving happens, and if this 4-year cycle plays out, then this would be the smartest thing that you've done in an investment point of view. So okay, so that's, and like for me, I already, and then also we don't have to. This is not the only way to analyze Bitcoin. You can analyze it in other ways. Like for example, this yellow line here on the monthly chart. This is a 50. Well, let's go to weekly maybe. Let's go to a weekly chart and have a look. So when we down from the top, once we reclaim the 50, exponential moving average, we go up fast. We reclaimed it here, boom, it went from from $5 to $60. You reclaim it over here, yeah, from $5 to $60. Then you keep it still, so you're still in, but boom, you went to $400. When you lost it, you're in a bear market. You just wait. Then you boom, you reclaimed it. You came back to test it. See, you rejected here. You came retested it. You held it. Boom, came to quickly retest it. Boom, you went up. You went up to 20K. It's ridiculous, right? So then again, you had a huge peak here, kind of mucked around it, and then boom, you get rejected from it. You dropped from 6,000 to 3,000, and you reclaimed it. So we are very, very far from the 55 EMA on the weekly. 21 is a bit better. You know, you kind of keep it. Once you are above it, you're holding it. You're holding it. It's been working really well in this 20K run up. Let's see how well it works. See, you're kind of rejecting here from the 21 EMA. Then you claimed it here, but then you broke below it, so that's your exit signal. You came to retest it, reject it again, COVID dump, and then once you reclaimed it and retested it over here and retested over here, a little 10K, boom, you ran up to 65K here, and then you had a slingshot up to 70K almost. But you lost it. So once you lost the 21 EMA, the purple line, we haven't even tested it for so long now. So yeah, we are very oversold. The other thing to look at is the RSI, oversold RSI. So if we have a look here, the RSI was oversold over here. I think I have to go into logarithmic scale because it's just you can't see really logarithmic scale. So you had kind of oversold here, which wasn't the low, right? Which wasn't the low, but still would have been a good time to buy. And you still dropped 50% below there at the peak fear, right? But this was the second time we got oversold. That was a perfect time to buy, right? And then you accumulate. And also, you know, we have this box there, the 500-day box, for a reason. So maybe when it gets oversold inside this box, then you buy. So over here, once again, we got oversold inside the box. If you buy here, this is the only times that Bitcoin has been oversold in its lifetime, right? 1, 2, 3, kind of close here, but didn't get oversold. Maybe 4, 5 over here. It's outside of the box, 500-day box. So we didn't, for example, buy here. If it gets oversold again, it would be a great buying opportunity. So yeah, I mean that's Bitcoin. That's Bitcoin for you. So basically, let's have a look at gold now, right? We had a look at S&P 500. S&P 500 looks crap, right? I mean, it's kind of downtrending, right? It's getting rejected from the 50 EMA. Let's have a quick look at the. So you got this, kind of memorize this. And then let's look at the 2008 crisis. 2008, the GFC. The GFC kind of looks similar, right? It rejected from the 55 EMA, and we're somewhere here right now. We're heading down. If we cannot reclaim this 55 yellow EMA, we will be in trouble, right? We will be in trouble because you can see here we just rejected it. So you know we got this support here, and if we break down, we're most likely heading down into this zone here. And then the Fed has to print money, right? They will not let the stock market to go into complete fear, like it did in 1920s, 1929s. And you know, now we have the printing press, which they didn't have back then because they're based on gold standard and they couldn't print money. The US dollar was based on gold, so you couldn't print gold, you can only mine gold. But now it's different. Let's look at gold, right? Let's look at gold. So gold looks very, very good. Gold looks very good. So it was looking pretty bad until recently. We had this massive bull market from not massive, but pretty good, from 1,100 to 2,000, 75% up, and now we double topped over here at 2,000, just a bit over 2,000, and we've been downtrending. So weekly is a very important trend. Like each candle is 1 week, so you have the weekly downtrend here, right? You got lower low, lower low, lower high, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower high. So you're setting lower low. You were setting lower low, then you were kind of forming this falling wedge here, right? You triple bottomed over here with this 1, 2, 3 weeks, and we basically broke out of the wedge. We broke out of the downtrend because we broke through, so we're no longer in the weekly downtrend, and now we've set a higher low here. We bounced off this zone of the higher low, and we are now at a higher high on the weekly trend. So we got a weekly high, weekly uptrend on the gold, which is very, very important, right, for long-term analysis. So now is a really good time to be in gold right now. Like I drew a couple of scenarios here. Basically, what we're seeing is we're uptrend on the weekly finally after 245 days of downtrend. Huge shift in momentum, right? But right now, where we are this 1, 2, 3, 4, 4 weekly candles here. This one is still not formed. 1 day and 14 hours left for it to run still, but assuming it closes somewhere here or below, it's going to have this long weeks. So indecision candle because of the long week, indecision candle, indecision candle. You can see these are indecision candles because they got this weeks instead of the full body like previous candle here, for example. So basically, does that mean that there's enough bears pushing the price down that I want to, because this is a key area here to reclaim, and the bears are trying to push the price down, right? But it's kind of, they're trying to push it down, but it hasn't even really started to consolidate. Can they start consolidating here? So I drew like a couple of lines. Maybe we're gonna come down and retest this breakout area. Let me zoom in on the daily. So you can see this area here. We came through. We kind of tried to bounce off it. We rejected. We went below it. We rejected from it. We tested it again, rejected. We tested it over here, paused it a little bit, and then boom, we broke through. And now over here, we made it a support. So this is a very important area. If the price comes down to this area, wait, let me make these two visible. I'm gonna make these two visible on daily as well. So check on daily. So if we come back down here, this would be a really good buy zone right here. But it already used it as a support, so maybe it's not gonna come back to retest this area, right? Maybe it's just gonna go to this intermediate area here, and then set a high low on the weekly wise. So basically, just gold. You can't be wrong with gold, especially with inflation, with war going on. The fundamentals are very good for gold right now. All the central banks have been buying gold, have been accumulating gold. It has been, the price has been suppressed. So inflation, is smashing us for the first time since like the 80s. The inflation is really bad. So we want to use gold as the inflation hedge because it has always been for thousands of years. So gold is great. Silver is probably better. The main thing is we are we are trending on the weekly, on daily on the gold, and once we start downtrending on the, once we lose the uptrend on the daily, that's when we're starting to set a weekly consolidation and high low for a weekly, and that would be a good time to get in if we, wherever we gonna form the higher low on the weekly. That would be a good entrance point. But if you want to accumulate, you know, it would be great time to accumulate because you know, look at the very long-term chart. It came up all the way from you know, 2000s, boom, hit the 2000 mark and then rejected, formed this base here, very big long base of price just going sideways for years. We are retesting this resistance, and if we can stay above it and break above it, you know, gold's gonna go to, I don't know, 3,000, 2,000 at least. So it's looking good. It's looking good for gold. Silver is better because silver is not even at all-time highs. It spiked in 79, but silver looks good as well. Silver is a higher percentage mover, and I can see silver outperforming gold, especially because gold silver ratio is kind of still high. Historically, it should probably drop to maybe 60. That means that for each ounce of gold, you would buy right now 76 ounces of silver. So at 60, you would buy 60 ounces of silver, and the historical rate is probably like 50 or something like that. So this chart only goes to 98, so but it's probably around 50. So expect if this chart goes to the ratio of 50, that means silver is running up faster than gold. So yeah, but gold is safer. It kind of moves slower. The other thing to consider in this market is the dollar index, because when dollar index goes down, asset prices usually go up. Gold usually goes up when gold goes down. It's not always like that, but it somewhat does. But maybe we're gonna start bouncing on the. You know, we gotta set this monthly high low somewhere, and we need to watch what happens when the dollar will start bouncing. Like this is a great area for the dollar to start bouncing. I already had the box drawn, but look, there's more action on it here. You know, all the way to 100. So it can drop to set the high low for a monthly. And yeah, we have to see if the gold's gonna consolidate or not when the dollar starts bouncing. Maybe that's when the gold is gonna come down to set a higher low on the monthly as well over here. On the monthly, maybe it's gonna come down to 16, you know, somewhere. But you know, we are uptrending, so on the daily and the weekly, so it's a good time to accumulate gold, especially given the geopolitics right now, wars and everything like that. So, excuse me. So that's all I wanted to talk about. I don't know. Let me know if you have any questions. If you want me to do technical analysis, I mean, maybe I can do a quick TA on Ethereum. Look at Ethereum on the daily here. We have this massive trend line here holding the price down. We're kind of testing it now. It's like it's not exact here. We've got a bit of a trend line here. You know, if we need to confirm this breakout here with a big volume, right? Like, even though it looks like it's broken out, these trend lines, they're not exact, you know, they're like more like zones rather than exact thing in the chart. So you gotta look it through like you know, with a grain of salt. You need what you need is you need a big breakout candle with a big volume, like a bigger volume than, you know, this. Look at this volume, it's like so small compared to this. So we need a big volume for the bulls to come through and smash through the weekly lower high over here and start to have a chance to uptrend on the weekly, and then the chart, the technical, will start to tell you that, you know, this is a good time to start to you know, to trade it, to swing it. Right now is a good time for accumulation because we're so low on the, you know, but for technical analysis, if you're doing like trading, it's a little bit different. Maybe I shouldn't even really talk about it because I don't think anybody who does actual you know, trading as a job is watching this video. But if we do drop down here and we come down below 1,000, that would be an amazing time, I think, to buy. And I would be buying a lot if we do drop down, if we start dropping down. But you know what? I already have a lot of crypto, so, and I cashed out at the top. I also held a lot for, you know, all this time when we've been going down since almost 5K on Ethereum. And you know, I'm not selling, right? I'm not selling until we go. You know, I don't need to sell crypto. Crypto is the future. Ethereum is the future. Ethereum is the, you know, supercomputer of the future. Basically, it can do anything you want for you. Just gotta pay the fees. And yeah, I mean, we just need to accumulate because it looks horrible, right? It looks horrible. Look at it. It's just been nasty. This year, one candle is 1 year. Look at it. It's just red down. So yeah, hopefully, if you guys have any questions, let me know. Let me know if you need to do any TA for specific coins. But that's the overview basically. See ya.